wrong?
I think a lot of it was around what happened in the US overnight and then what happened around the region today. Overnight we heard from Evans and really putting that September tapering back on the table. And of course that's been horrible news for commodity prices. We're seeing the material sector the worst on the Australian share market today, down by 2.5%. And then of course there's the absolute slaughtering that we are seeing on the Japanese markets. The Japanese stock market is down by 3.7% at the moment. Part of that story is a strengthening yen, and if we have a look at the yen, the Japanese yen against the US currency, this is just a 30-day chart, and you can see just recently we've seen the Japanese yen exploding, and that's really bad news for the Japanese economy and the Japanese stock market. So seeing an impact there. The Bank of Japan has also started its two-day meeting, and there is an expectation that we may see stimulus remain on hold this month, so that's also having an impact. But coming back to the Australian share market, and domestically we did see some economic numbers here as well. Home loan numbers coming in better than expected for the month of June with a rise of 2.7%, but that really doesn't seem to have helped the market. In fact, if I just bring up a market map showing you which stocks are gained in green and which stocks lost in red, you can see it's red across the board. There's one green spot just over here, and that's Fox, and that's after its result. It rose 1.1%, but elsewhere around the market it was losses in every single sector. In fact, just looking at the top 20 stocks on the market, we saw every single one of those top 20 stocks declining today. And having a look at the top 50, we actually only saw 3 stocks making gains, and that was Fox, Dexus, as well as Stockland. So all in all, a bit of a bloodbath on the Aussie market, and we've also seen it on some increased volumes, $4.2 billion worth of stock being traded today.
So on those technicals?
Things aren't looking so good for the Australian share market. One of the psychological levels that we've been watching closely is 5,000 points, and we closed at 5,011 points today. So the next couple of sessions are going to be absolutely crucial from that psychological point of 5,000 points, that we manage to keep our heads above that mark. We have a look at the 30-day chart for the Australian share market. This is what it looks like, and really where we closed today takes us back to where the market managed to break that 5,000 point convincingly. So unfortunately we're back to testing those 5,000 point levels again. Hopefully it does act as a support to the market, but it is a key level that we're watching, and we're getting closer and closer to that 100-day moving average, which is around that 5,000 point level as well. So the next couple of sessions absolutely crucial. Of course, one of the trends that we've seen in the past month is that the material sector has started to fight back, and while we've seen iron ore prices improving overnight, unfortunately that did not help the material sector today, getting absolutely smashed with a 2.5% loss. So if we start to reverse some of those gains that we've seen in the past month for that material stock, those material stocks, that's going to be a negative for the Aussie share market, and I think that's a key reason we've managed to keep our heads above 5,000 points. And of course tomorrow's a crucial session for materials. That's because we hear from Rio Tinto around about 4:15 this time tomorrow, and Rio Tinto due out with half-year numbers. We are expecting to see underlying earnings of about $4.2 billion coming through there.
While we're talking Rio, just for our viewers, we'll be speaking live to Sam Walsh, the Rio Tinto CEO. They'll be live out of London, where they're actually unveiling their results about 9 p.m. Eastern Standard Time tomorrow. So make sure you stick around for that. I know it's a little bit late, but maybe have a bit of dinner and then flick Sam Walsh back on. The banks, you mentioned the miners down heavily today, Julia. We've seen the banks down, the big four down around about that 2% mark. We've seen such interest on any big dips in the likes of the banks. Do you think we could see some people see this as an opportunity over the next couple of sessions and start pushing back in?
Well, I think the last couple of sessions have been quite revealing around market sentiment around the banks, and that's because yesterday we saw the Reserve Bank cutting interest rates to a record low level, 2.5%, and usually a move like that does stimulate more demand for the higher yield, the income areas, and yet we haven't seen demand for these areas increasing. In fact, if we have a look at the financial space, as you mentioned, James, down 1.9% today. Not only that, we saw utilities down by 1.2%, and we also saw property down by 1%. So those traditional high-yielding areas, which usually benefit when interest rates fall, are actually having quite a difficult time in the last couple of sessions. So if this continues on, that's really going to, I guess, just stamp that view that the interest rate cycle is perhaps coming to an end there, and we may see some of those more growth areas of the market benefiting. Of course, if we have a look at the interest rate cuts and the impact it's had on the economy, I guess the biggest impact has been in terms of the housing space, and we're yet to see a flow-on effect to some of those cyclical areas like the building materials as well as the